So, as I mentioned earlier today, we're going to discuss Series LLC partnerships. So, first off, I'll ask, is anyone currently in a Series LLC partnership? Okay. So, yeah, no, I was just curious because by the IRS definition, any individual that owns an asset or in an LLC with another individual theoretically is in a partnership. So if you're in a partnership, the IRS requires you to file a form 1065, which is a different tax reform. And that 1065 kind of would have its own P&L, its own assets depreciation. Pretty much all that is kind of another form. But where there's a caveat to that partnership is if you're married, you and your spouse could file a 1065 partnership if you want to, which in some instances for tax reasons could be beneficial. Or if you're trying to get loans from that LLC that you both are members of, or as a married couple, you are allowed to not file a 1065 and you can just put it on your return as you normally would. So that was the one big caveat is if your partner is your spouse, you don't have to do 1065. Everyone else has to do 1065. So that's the subject that I'm going to focus on is the 1065 with a partnership that isn't your spouse. So last week,
Jason Can I ask a clarifying question on that, Pete?
Yeah.
So would you be able to do this 1065 even if you and your spouse were married filing jointly?
Yes, you can still do a 1065 with your spouse through the LLC. So what would happen is your LLC would file the 1065, and then it would just issue a K1 to your spouse and a K1 to yourself.
Mm-hmm.
And
okay.
Some people choose to do that because they can kind of hide the assets off their personal return. So what I mean by hide the assets is, let's say you have 3 rentals, they'd be on your Schedule E normally. And if you go into a bank for a loan, they ask for your tax return, they're going to see each property listed out. While if you have a 1065, you get a K1, the K1's just going to give them a number. So at just the base level of your personal return, they're going to see just the K1 that you and your spouse own a company. More likely than not, they'll probably keep digging and ask for the 1065 partnership return, but theoretically they may not. So some people choose to go that route and file a 1065 with their spouse.
Well, Fannie Freddie lenders will consider more income off K1s than off the sole proprietorship in general, I believe. So it may be beneficial to bulk up your income by bringing it through the K1 route. I didn't know that you could do it as a married couple.
Yeah, you can file to choose to do that. It's just, again, it'd probably increase your tax fees because there's a separate return that's being filed. But at the end of the day, like you said, if you were new into the venture and as a sole proprietor, they usually want 2 years before banks will lend to you. While with the K1 that way, you might be able to get that window shortened down. So that's interesting. So you don't currently do that, Brendan, or are you still doing it as kind of through your personal return?
Yeah, I report my stuff through, my spouse and I, we report through a married filing jointly return. But, I know that Fannie Freddie lenders have taken out a chunk of the rental income that, in consideration of, for considering the debt to income ratio and such, that they would not if it were on a K1.
Yeah, can I understand that a little more clearly so that the lenders treat K1 income, give more weight to K1 income than they do to Schedule E income? Is that correct?
Correct. Because on the rental income, what I've seen from talking to bankers is in their software, when they enter the loans into their system, they'll also input vacancy credits, which will also lower your income. And then they have, depending on the bank, they may have percentages set for repairs, maintenance that might be lower or higher than what you have, which also take away your income and lower that income.
Very interesting. Thank you. Because, if you have new houses, you're kind of getting dinged that you shouldn't be for non-existent expense.
Mm-hmm. Yeah. And what I also like, I think Rebecca's asking for the 1065. What's nice about that is if you have attorney fees, professional fees, marketing fees, on the 1065 form, you can actually expense that entirely on its own. And then the properties will be on a form 8825 that rolls up to the 1065. So on a partnership, you can just enter the whole cost for the partnership as an expense. Let's say you paid $1,000 for a legal fee. While if it's on your personal return, to expense that to the property, you would have to put it directly to the property. But if it was a conversation for multiple properties, for bookkeeping wise, you're going to have to kind of break that out between the properties then. So it's kind of easier in that aspect to do a profit and loss with expenses that aren't directly tied to a specific property. So that's one benefit, Rebecca. For my married filing jointly, that would kind of be, I think, the two biggest issues I'd see, because at the end of the day, the K1 is going to roll up on your Schedule E page 2 and then roll up to your 1040, just like the Schedule E as a personal. So again, it's kind of all flows through to your final return on your personal return.
Are there any other side benefits like the ability to set aside retirement funds or something, set aside IRA contributions or stuff like that, 401k?
You could run it through the LLC and you could run it through that way. It could be a little more straightforward if you have income with that LLC as a 1065. But at the end of the day, it's going to be a wash whether tax wise it'll be a wash. It's just where do you want to put the expense and the contribution from the employer side.
How about state taxes?
State taxes, again, it will just roll up to your 1040 as it currently is. So you'll still pay tax on the dollar amount. That's the one thing too with the 1065 partnerships though, is those are due March 15th. So you have to file those or file for an extension. And if you do file for an extension, those have to be submitted by September 15th. So usually just a month earlier. And the reason that I have an earlier filing date is, as we kind of mentioned earlier, a partnership will issue a K1 to each member, and that K1 is used to prepare the partner's personal return. Kind of the majority of people that are in partnerships, not with their spouses or in syndications or in some sort of deal where they receive a K1, they usually end up filing an extension on their personal return, because a lot of times K1s aren't issued till June or July. So anyone here have horror stories about not getting a K1 timely that they want to share?
Well, we have several, including one that's still out.
Oh, you still have one that's out.
Yeah, this is my first year that I've ever done an extension, but it wasn't due to the LLCs I have, but it was due to my investment in energy transfer. And I guess there's a new K1 or something for about foreign taxes or something. So they said it wouldn't be done until later in the summer. And since I got till October, I haven't looked for it yet.
Yeah. Yeah, the IRS did for 2021. There was a new addition to the K1. It was, I think, a K2 or K3. They renamed one of the forms, and it's more in depth on the foreign taxes. And a lot of individuals that were receiving K-1s with those had to do an extension. One of the questions is, if you do a partnership with your spouse, you would still use the entity EIN. You wouldn't use your social security numbers for the partnership. The partnership that is an LLC, and the LLC has its own EIN.
So actually, Pete, my question is, let's say if you choose not to elect to use as partnership with your spouse, and you're married filing jointly, in that case, are you using SSN to file the return of that, or you still file separately for the LLC and then use the income on your personal return?
So the LLC would still file its own. If you choose not to do a 1065 partnership, the Schedule C would file a 1040 Schedule C, which is in essence the same thing as a 1065, but it would be on your personal return as a 1040 Schedule C form, and you'd use the EIN on that form. And then that Schedule C would roll up to your personal return as income or loss, self-employment income or loss.
Okay, actually, I have one follow-up question on that, Pete. Actually, I asked earlier also, but it will be good to get your opinion also. So I have a traditional LLC for the management, and I work with management companies, and they ask me to fill a W-9 form. The W-9 form for line 3, it's very clear. Like if you are not multiple people, then you are basically single the individual entity, and then it asks you to use your SSN instead of the EIN.
I would use the entity EIN because the entity is making the contract with that management company, and the EIN is the tax ID to that management company. So what the management company will do is they will write checks to that operating company of yours. And then that operating company of yours will distribute the profits or rents to your holding company where you have the rental properties.
Okay, then LLC, sorry, go ahead, please.
Because the LLC, that operating company at the end of the day is just kind of a face. It has no assets, and it usually ends up at pretty much zero or little income per year.
So that LLC will be categorized as individual or partnership? It's not a partnership though, right?
Well, again, by the IRS definitions, if there's two people that are members of it, even if they're spouses, it's a partnership. But you just get a waiver as a sole member if you're married. But on those 1099 forms that they request so they can send you a 1099 at your end, I would use the partnership name and EIN. I would not provide my name or
got it.
Social security number.
Thank you, Pete.
Yep. Brandon, from what I've heard under the old way of the IRS, partnerships get audited less than sole proprietors. Now, with the new tax law that was just signed, or the Inflation Act, where the IRS will be getting more funding going forward, I do not know if that will still be the case or not. Everything I've read is talked about them focusing more on higher net worth individuals with maybe S corps and people in the kind of Bitcoin currency type trading markets. But again, I don't know the future, but historically, yes, partnerships don't get audited as much. But just to give kind of a context, the last 2020, 21, 19, I think percentage-wise has been the lowest amount of audits kind of all time. So, excuse me. Anybody else have questions regarding the 1065? If there's any issues from like a tax standpoint or how they kind of roll up to your personal return?
Yeah. Hey, Pete, if I have a spouse on my series, but I'm the primary member manager, does the K1 go off of like both of us split evenly, or all to me because I'm the the sole manager?
So if you do the K1s, it'd be dependent. It's dependent on how you contributed capital. So on the K1, it would say you're the managing member and you have to sign the return for the 1065. Well, more likely than not, you're probably in a state where it's 50-50. So at that point, it'd be 50-50 based on that concept, unless in the LLC formation, it clearly stated you had X amount of ownership and then he had X amount.
Cool. Thank you.
Yep.
I just have a quick question. When you talk about partnership, you are talking about forming an LLC, but file tax as partnership, right? You're not talking about the entity itself is partnership.
The LLC is formed, and the LLC then would be filing its paperwork as a partnership.
Right, because if you have an entity that's partnership, for example, a lot of lawyers, they are partnerships, and they're not LLC. So we're not talking about the entity itself legally, right? We're talking about how do you file tax. However, the entity is still an LLC. Is that correct?
Yes, it's an LLC entity, and we're just saying LLC as a partnership. We're not talking about limited liability partnerships or limited partnerships or general partnerships.
Okay,
yeah, this
perfect.
is all. Sorry to confuse you. This is all based on LLCs or series LLCs.
Yeah, okay. And then can you just give me like a list of benefits of filing as partnership instead of disregarded entity or as a S corporation?
So the nice thing about the LLC as a partnership 1065 is kind of mentioned earlier. There's when you're running your real estate business, there's kind of costs that you incur, maybe travel, training, legal fees that might not always be directed to one of your properties. So this on a 1065, it allows you to kind of expense those as a total for the partnership to where you don't have to break them out. It's just a lot easier from a tracking purpose and an organizational purpose. So that's one benefit. As Brendan mentioned earlier, you know, the banks in his experience, if you have a K1, they're going to recognize all that income. While if you have it as a sole proprietor flowing through your Schedule E by rental, they may not recognize all those. So those are kind of the bigger benefits, and also kind of can keep when you do go in for loans. It won't prevent, but it could limit the questions banks ask on what your assets are or other types of income where they can see what you're charging. So let's say you owned a business and the property and you rented from one another. It could provide a little barrier from them really seeing more into that by doing a partnership because they're just seeing that single line item for all your properties.
So if you ever get audited on your personal, are they also going to audit your partnership tax or a separate issue? They wouldn't even audit.
That would be a separate issue if they look at it. Because what you do is you, as a tax preparer, I file a 1065 with the IRS. It says 50 grand, and then it issues K1s.
Right. So I'm just wondering, when the IRS start auditing you personally and they find things and will that typically trigger them to go into your partnership tax returns to look at those, or they wouldn't go that far? That's just my question.
Historically, they would not go that far because they're looking at just your personal return and they see a K1.
Oh, got it.
I'm not saying they want it, but just historically they have not. And with the new influx of cash to it, I don't know the future on that.
That's right. Yeah, that's true. Thank you.
But for an S corp, that's its own corporation, even though it's an LLC taxed as a corporation. Those can get audited, and they are audited more frequently than a partnership historically. And that is one thing that I've read mentioned, that the new IRS agents coming on board will focus on some S corps, supposedly at the 400,000 level or above.
Yes. So if your LLC is a single member, then your option is only 1040 or 1120, right?
Or when you say single member, is it just you? Or is it you and a spouse?
Yes. So you can't.
Yeah, if it's just you, it would be you. It would be
it will be
sole member schedule
disregarded or 1120 as corporation. Okay, got
correct.
It. Thank you.
Unless you create another entity that's an LLC, that it becomes partnership.
I see. Okay. Thank you. Yeah.
Thanks, Julie. We have a question from Devon.
Okay.
Go ahead, Devon.
Says, I'm thinking of putting my bank account in a single member LLC. Do you recommend to have myself as the manager of the LLC, or just apply myself as the president of the LLC to make it easier to sign the paperwork? So typically, you would have a bank account for your LLC, and it could be under the same bank you're at, and you would be the person in charge of the bank account. Was that your question, or?
No, my question, I know I have a different option of, can you hear me?
Yes, I can hear you.
Oh, okay. No, my question is, that's what I want to do, open an LLC in my bank account. My question is, does it matter if I have myself as the, so the bank, the LLC bank holding LLC is owned by a living trust. So does it matter if I have myself as a manager of the LLC, the bank holding LLC, or I can have or I have the trust as the manager, and I have myself as the president of the LLC? Because I was just thinking, make it easier when you sign, the paperwork and everything. And then, that's what I was thinking, to make it easier when I sign the paperwork, if anything, paperwork needs to be done.
Yeah, in that aspect, are you trying to stay anonymous? Because that might be more of a legal question, but I would think you would want to be able to have your name on it to sign any paperwork.
So it would be better if I have myself as a manager of the LLC that owned by a living trust. Or do I have to?
Well, you'd have a bank account opened up under the living trust, and then you'd be on it. Your name would be on it as someone who has signing privileges.
So you're saying if I open an LLC and I have a living trust as the owner and myself as the manager of that LLC, so when I open a bank account, does it gonna be under the LLC name, or would it be under the trust name?
The LLC, is it an operating company, or what's the LLC? What are you wanting to open?
No, just to mainly holding my bank account. You know what I mean?
It'll be.
It has no real estate. Yeah.
It'll be under the name of the entity that's opening it. So if it's your LLC, the bank account's going to be under the LLC's name with its EIN, and then you're going to provide your personal name as someone that can sign items out of it.
So you're saying I don't need to worry about the trust, because I'm going to have the trust as the owner of the LLC and myself as the manager. So it's easier if any paperwork or anything needs to be done, I can sign for it.
Yeah, and correct on that. That's where I would probably contact the legal side of the business to determine the best way to approach that. Just from a bank account standpoint, you can open it as the trust, and the trust would be the name on the bank account, and then your personal name would have signing privileges. So that's what I tried to get away of. I was like, so I can either go the LLC route for asset protection, or I can go the trust route. Why do I have to go through an LLC and have the living trust own the LLC?
But then I can't just go to a bank and open an account under, well, I guess I can under living trust, but then that means when you do the tax at the end of the year, I look up online, it says, the trust tax rate is a lot higher.
So,
and this is a single member LLC. So I try to keep the tax rate the same as for me.
Yeah. So certain trusts too, a living trust tax wise is just going to flow up to you. Living trust, you don't really file a 1041 or pay taxes on for the most part, unless it's where you're not able to amend it. And then you would have to pay taxes on it if you kept income in that trust's name. While most people would issue a K1 from the trust, which would zero the income out of the trust, which would make it have no income and therefore no income tax.
So does that mean I have to do a trust tax return then?
For living trusts that you can make adjustments to, those, to my knowledge and understanding, they flow through to your personal return. They're not like a true trust in the sense of a tax perspective.
The key is whether it is a disregarded entity or not.
It is
So
a
if the trust
disregard
is
entity.
disregarded,
Yeah,
it
it's
should
just
just flow
myself.
to your personal taxes then.
Correct. And the only way it becomes not a disregarded is if you make it to where you can make no changes to it. But those aren't the web trusts that we set up at Royal Legal.
And Devon,
Yeah,
sorry.
I just try to make it easier. If I just go ahead, just forget about, just open an LLC. My main thing is for asset protection. So I would just like, should I just go ahead and open an LLC and not even worry and have my name as the owner on the bank LLC, or should I just have the living trust to be the owner? I just try to make it easier in terms of doing tax and stuff and make it. My main thing is asset protection. That's it,
Correct. And that's, what are you using the LLC for, I guess? Is it an operating company or what?
No. It's just that, you know how you have, I have some CD,
Okay.
So that's my emergency fund CD. I have some
Gotcha.
CD at the bank emergency. So for asset protection, I just want to go the extra step, open an LLC so they can't trace me down. Basically, you know how the lawyer can look up your name and they know, they can find you wherever your stuff is. So if I keep it under an LLC and I don't show the public I own it, and then they can't find me. Basically, that is mainly for asset protection.
Then
I don't know. I'm being too annoying.
Yeah, no. Then that
too
instance,
far.
I would open it under the LLC in that point, because the LLC bank account's going to be the name of your LLC. And the EIN is what you would provide the bank, which is in the LLC documentation. You should get a number there. So
I would say if you are talking about your bank account, CDs, stock brokerage, keep it in your personal name.
Really? Why? But then, if you go into because I own a real estate on the side, so I'm just afraid that, okay, if someone sue me from the real estate and
real estate,
even though
real estate
they can
keeping
track your
LLC
name down.
or land trust, bank account, those kind of things, keeping your personal name. This is not a legal advice, but keep it under your personal name. If any lawsuit, personal has exemption. LLC does not have exemption. So especially in certain states, the exemption could be quite high. They couldn't touch it.
Oh, I thought mainly exemption is the house, not the bank account, but I could be wrong.
well, usually it's like retirement accounts, high level, usually every state's different.
Right.
Those are usually protected. Certain homesteads
we talking about
protected.
Texas now. Yeah, I'm in Texas, so we just talk about Texas. Yeah, only retirement account in your house, that's it, and your car and your whatever, some item. But as far as a bank account, I don't think it's under exempt for a judgment call from the judge. So that's I was just thinking of that part. So you think to make it easier, just open an LLC and have myself as the owner of the LLC, single member LLC, and then I don't need to even consider put the the living trust as the owner of the LLC?
Yeah. Let me.
You need to ask maybe
That's more of
Scott or
that's more of a
Megan,
legal
right?
question.
Yeah.
Exactly.
Oh,
Devon?
okay, got it.
Yeah.
Okay.
Sorry. Yes, Devon, we are dropping some links there. It's a free consultation from our legal side. So Liz is dropping the links for you to be able to do that. Just click on the link and then answer the questions, and then someone from our team will contact you regarding those questions for
All right.
legal.
Thank you.
You're welcome.
All right. Let me. Sorry, I'm just looking through. Brandon, you're talking about the California franchise tax.
Oh, I didn't ask about somebody else.
No, I said Brandon. You did. The minimum $800 fee, and then it's based on revenue. If revenue's X amount, then you have to pay more than the $800. Is that what you're asking, or?
Yeah. Can you hear me?
Yep, I can hear you.
Okay. Yeah. So there's an $800 tax, and then for revenue over 250K gross revenue, there's an additional fee, but that isn't charged to a single member LLC. What I'm asking, and you probably either know this or not, because it might be too in the weeds to figure out on the call here. But does it end up being a wash? With that additional fee that gets paid if you go the partnership route, or not? I think it probably requires figuring it out both ways to see if it ends up being tax neutral or if the fee is an addition.
Yeah, that would definitely require an analysis, because off the top of my head, the only answer I could say is it depends, and it would depend on dollars. So.
All right, good answer.
Yeah. Sorry about that. So I just want to do a time check. We got about 8 minutes left. Is there any other questions that you guys have or haven't addressed yet, looking through the
So
chat?
what about if you have a person, let's say you have the Series LLC and it's your spouse or whoever's on like the parent Series LLC, but then you have, can you and how does it function to have someone else on one of the child series entities and do a partnership with like a second person or a third person?
So from a tax standpoint, that partnership on it, what would happen is, let's say house one, you were a partner with your sister. What would happen is your percentage of that partnership would flow up through your final return. So if you own half that house and house A, all the expense, all the revenue, about half of that would roll up through your Series LLC.
And that child is not filing a 1065 on its own because it's now a 2 LLC partnership?
You could recognize it that way, where that child itself could have to file a 1065, and then the K1 would go to the parent Series LLC. You could do it that way as well.
Okay, and then what you were saying is you could also consider it as you're just half investment in that your particular LLC.
Correct.
You just take half of everything. Okay.
Yeah. And then
at what point would you say we have to do it 1065 when there's 3 or 4 more partners?
So a 1065 is required if there's just one other partner that isn't your spouse, is how I would conservatively tell you to do your return.
Okay, so then I would think that if 2 different LLC entities owned by different persons, they would have to file a 1065, even if it was one of your child, right?
Correct. If you're wanting to do it the most by the book way, that's how I'd recommend, and that's how I would do it. Other people would just keep it in the series and then just issue a 1099 or just issue half the profit or half the income. But in this example, I was just trying to say half of it will end up in your parent LLC. But yes, from a tax standpoint and even asset protection standpoint, having a separate LLC with someone that's not your spouse is probably the safest way to go, in my opinion.
Can I share a little bit about what I went through? And since I have both the series and traditional under the real legal system, and we're 5 owners on each one. And so for opening a bank account, I went to the bank to open it up under the series, one bank account for the Series LLC and another bank account for the traditional LLC, which is the operating company. And the bank, there's 5 of us. And so the bank asked, well, we'll just need your operating agreement. I gave them the operating agreement for both entities, 2 separate bank accounts, right? Mm-hmm. Basically, I didn't give them the whole operating agreement, just the first page and the signature pages. And then they said, okay, it looks like the trust owns it. Can we have the trust? And so I did the same thing with the trust. I just gave them the first page and the signature page, and they accepted that. And so they basically the name of the bank account is in the LLCs, not in the trust. And the bank also had all 5 of us sign. Although I pointed out to them, well, your documents say 25% owners, and we're only 20% owners, right? Because there's 5 of us,
Mm-hmm.
But they still wanted all of us to sign.
Yeah, because I'm just curious, did they have any in their stipulation with the bank account or in the partnership agreement? Was it like a simple majority of over 50%? So you would need 3 out of the 5 people, or?
I don't remember the operating agreement saying that. I know it just says that we're all equal owners, 20%,
Gotcha.
But I mean, it's 100% owned by the trust, but we're all 20% members of the trust. And
Mm-hmm.
yeah, something like that. And even when we bought a property, we bought it under the name of the operating company. And the closing company and the lawyer that we hired, had us sign as all the trustees signed that I could sign and buy the property for the LLC. And it was just a simple document they drew up.
Mm-hmm. Okay, so you're kind of the managing member and have agent authority. So interesting. Yeah, thanks for sharing that.